Good day, traders. This is Richard. It's February 1st, the first day of February, a Tuesday at 11:10 a.m. Pacific. I am looking back to trading this AM. I'm going to show you 3 separate trades that would have been extremely good to take. 1, 2, 3. This is a sell. This is a sell. This is a buy. I'm going to draw a little circle like I have on the other two, right on the top of that wick. I'm going to squinch it up a tiny bit. And so what I'm showing when I draw a little circle on the top of the wick or the bottom of the wick, I'm starting at the very bottom of the wick and I'm going up a little bit, approximately, relatively speaking, possibly a quarter or even a half and sometimes 3/4 of the wick to show about where you would want to enter the trade in the direction started by the wick when price was clear down here. At one time, this wick was a Marabuzzo. In other words, it was a flat bottom. It was black all the way down to there, a bearish black candle. Remember, black candles are bearish and white candles are bullish. Then up here, we've got a right-hand trade. That's a sell signal. This wick sticking up here denotes denial. These buyers were denied access to further movement to the upside where they want to go. They got up there, but somebody got in their way. There was a traffic jam. A bunch of sellers came in and knocked them off their perch. They've been going gangbusters all the way up to there. If you'd have bought down here, you'd have made $400 up there. Let's see, 87 to 88. No, that's $1,000. So let me draw a horizontal line from the bottom of that to the top of that. Look over there to the right. That's 88.32, and this is 87.02. So 87 to 88 is $1,000. $110 ticks is $1,000, and 88.32 is 30 more $10 ticks. So from 87.02 to 88.32 is exactly $1,300 or 130 $10 ticks. So that would have been a beautiful ride from there up to there. I'm just going to draw it. Whoops, I don't want that. I want to get rid of that. Go away. I'm going to draw a little arrow up there. That's your $1,300. Let me type that in here. Just type a little $sign and a 1 and a comma and a 300. Now that's going to be in yellow and the arrow is in red. It doesn't matter. I just put it down here. I better put it up there, because after that ride from there up to there is your $1,300. See, 88.32. That'd be, and then we entered at 87.02. Now that's a perfect deal. You know, you don't always get at them that perfect. It just happened. I've drawn it that way to illustrate my message, but don't expect to get all 1,300. Be happy with 930 or 1,002 or even 800. Any one of those numbers would have been good. How long did you do that? How long did you work? Well, each one of these candles is 15 minutes. 1, 2, 3.
RSI oversold. That's
an hour and a half. You willing to work an hour and a half to get $1,300? I am. Figure that out. How much is the hourly rate? An hour and a half for $1,300. The hourly rate's $750 an hour. So I'm not very good at arithmetic, so be careful. Do an audit of any number I say. I might be wrong. I have dyslexia and I can't help it. So, but I can draw you a picture and I can teach you how to do this. So what did you have to do to get this trade? You had to buy it right about there in that little circle area. I'm going to circle it now so you see what I'm talking about. You wanted to enter when that thing started coming up off the bottom. You know, you saw it come down, you saw that one go up, and then you saw this one go up, and then you saw this one open up here, come down all the way down to there, and then start back up. It opened here. It went all the way down there. Then it came back up here and covered that whole territory up to the top of that wick, then backed off a little bit and closed up on top. White candles close on their top of their body. Black candles close on the bottom of their body. So that little trade entry right there could have made you about $1,200. Let's not go for 13. You'd have never gotten exactly 13, but you could have gotten 1,000 or $1,200. Pretty easy. No, not easy. But the whole time, I'm sorry, that just happened to happen because I moved my mouse. And so what happens is, as you're going up through that, you've got to guard yourself. When you started the trade, you entered with an ATM strategy, automatic trading methodology strategy that we assigned. It looks something like this. This is a strategy. This is a 3-lot strategy. We only bought one, so let's go down here and look at this one right here. So this is a 10-tick stop with a 30-tick gain. Now we went up here a whole 1,300 ticks. This was only expecting to go 30, a fourth of that, or even a fifth of that. So once you got in with a stop right about here and a target right up here at about 30. And what you needed to do is keep advancing your stop to where it's about 7 ticks back from price as it reached up. But then you don't want to advance it too much, because see what happened during this candle? Came all the way down there. If you'd advanced your stop up to there, you'd have been stopped out and you never made it up there. So you have to manage this thing. It's like watching your 3-year-old or your 2-year-old outside of the crib, outside of the playpen, outside of the high chair, on the floor of the living room with all those electrical sockets and all mama's beautiful little things that she keeps on the coffee table. And you've got responsibility for watching this baby. And you want to make sure that the little kid doesn't break something of mama's, because you know how much trouble you'll be in. And you want to make sure he doesn't hurt himself or she doesn't hurt herself. You want to make sure she's happy and content and gets to explore her environment, but you want to protect her like she's your precious child. This is your precious child. This is a living trade opportunity to make money, and you want to make as much money as you can, and you see it, you get in it right above that top of that circle. And it might move against you a little bit, then it starts going up, and then it moves against you and it starts going up. And it just works its way up like a ratchet. I've got a beautiful picture of a ratchet somewhere, but I'm not going to go get that right now. Just think about a ratchet wrench, a ratchet. It's 2 steps forward, 1 step back, 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's trading 101. So your little ratchet goes all the way down to there, goes up to there, down to there, up to there, up, down to there. Okay, and then the time passes, 15 minutes comes, another candle comes and goes all the way down there against you. You had about $400 here, maybe only $3, and you lost $150. And you thought, oh my God, I should have taken my profit. But then the new candle comes and it goes up, makes almost a new high, just barely a new high. And then you sigh a breath of relief. This thing does want to climb. I'm going to stay in it. I'm going to move my target up from 30 ticks to 500 or 50 or 70 ticks, something up here out of the way. Then I'm going to move my stop a little bit so I don't get stopped out, but I'm protected. So I keep some of my money. And you keep on letting it ride up, up, up as you adjust your stop and you adjust your target. So your target doesn't get prematurely prematurely targeted out, because you don't know it at this point in time that you've got $1,000+ waiting for you up here. If you stay with it, you don't know that. It could go back down here any minute. So you've just got to watch it like you watch your baby. It's like babysitting. It's intricate. It's special. It's father time with your kid. Just think about it like that. You've got a little kid that you just love, and you want that little kid to grow up and be somebody. Well, this little kid's going to grow up in about an hour and a half and hand you a windfall prize. Here, Daddy. And he's smiling so big because he even put a bow around it. The kid's the genius. Think about that. Put all those little thoughts together, and you'll see why I'm going to teach you a lifestyle that will last you a lifetime, while you can take money from the market most every day if you treat your trade like you would your baby. Here's another trade opportunity. This is my left-hand trade. This was my left-hand trade. We bought off the bottom, and now I started, like, I put this whole thing together to teach you how to take a right-hand trade. That's a short. And here's the short. There's the special short. This is not quite as profitable, but the distance from here down to here, where you should have got out, would be somewhere in the neighborhood of $700. So you you move this little line up here. I'm going to put this line in temporarily. And so we can see that right there's where you're going to get in at 88.77, and you're going to get out down here at 87.58. So 88, see, 88.77 down to 88.32. So about $400. That's all that one is. No, I'm getting confused here. This is the one we're working with. That's the candle we're talking about, and that's 88.77, and this is 87.58. It's about not $800, okay, roughly. So 88.77 subtract 87.58, and I have less than $1,000. So that's a denial sell. This is a denial sell. This is a denial buy. Now, that's a nice, quick and dirty little explanation of what we do, how we do it, when we do it, why we do it, and where we do it, and which item we do it with is crude oil. It's a March 2022 contract, which will expire about the 19th of March, and here it is, the 1st of February. I'm sorry, it's going to deliver the 19th of February in about 2.5 weeks, 3 weeks. That's it. Thank you for your attention. I hope this was beneficial to your learning excitement.